Hey everyone, welcome to the weekend stock talk for August 9th. This is the S&P 500 on the daily time frame. And what we can see here today was, for the most part, we see the yellow trend line. Higher low trend line, and you should see the significance of us coming to it today. Remember yesterday, I said that yesterday was a pretty bullish day, and as long as bulls can close us above this trend line, it's okay to retest it because of increased volatility. Closing above the trend line is still positive. So this is exactly what we did today. We came down to retest the trend line and we closed above it. Now, was it a pretty picture during the day? Well, let's take a look. So obviously not a pretty picture, but we've seen these whips up and these up moves and then these dives and then up again and then dive again. But what really is important is how we close the day. So, I always find it really important, in my opinion, to identify the most critical trend lines. I've always talked about the fact that if you have so many trend lines on the chart, then you won't know which trend line you're going to trade off of. Therefore, it is only important to identify the most valid trend lines. Look at the validity of this trend line. So here, it acts as support upon the aftermarket dip, right? Now, we dipped under, and I was monitoring this, and especially you were monitoring it on different time frames. But what was important is how we closed. And look at the close. We closed right on that trend line, above that trend line. So again, that's positive for now, right? So why are these trend lines important? That's another fact going into why trend lines are important. Going to the 5-day, 5-minute, you can see the red line, a yellow line. So red line should be defendable. Yellow line should be defendable as well, especially if we break across. This is what we see today. Now, in order for bears to show something else, what bears need to do is make a U shape and close us below that line. It's quite simple, actually. Now, if we do that, then we have a potential to come down and retest this line and print a 278.48. And so because we really have not printed it on the S&P 500, even though this was on the futures that occurred on August 5th. So do we have to come down? I always say this, we don't have to come down to this area, but these two levels, as you can see, are important levels. You want to take a look at more important levels? Come join the group. We're doing this all the time. Simple and effective. That's what we want to keep it at. All right, so that's the S&P 500. Let's actually go to TVIX. So here is TVIX tracking volatility. So I pointed this out as well in the past that if this was the peak, making a series of lower highs and lower lows, but let's just talk about these major peaks, lower highs, shows that this is still on a downtrend. Now, how do we know trends have flipped? Well, as we can see, this was the 2018 starting in October, right? Got a series of higher high, and ultimately even a larger higher high, right? So this is the pattern that we want to avoid. How will we know that we will get one of these patterns? After the fact, right? So by this time, the market is probably all the way down back at support, the red line on the S&P 500, or lower if we do something like this. So far, we don't see it. So you have to take this for what it is right now. Lower highs showing us potential more downside to come. Now, do we have fear in the market? Certainly. There is certainly risk involved holding both long and short positions over the weekend. So, but this is so far showing a downtrend. TVIX. Crude oil. Crude oil had a nice and decent move to the upside today. So we're getting, again, close to the moving averages, but crude has much more work to do. This is one day out of many days that I have to see crude oil recover. In order for crude to really prove something, closing over $58 is the level that I would be looking for. Until then, I can see us whipping back up, coming back down, whipping back up, coming back down. I can see that quite a bit. Crude needs to have more effort. If this is day 2, right? I need to see day 3, 4, 5, 6, 7 continuous move to the upside before I can say, hey, this chart pattern has really flipped. Could this be the reversal? It certainly has the potential to be, right? But right now, we just don't, there's not enough information to say we've completely reversed. There's a lot of stuff that needs to happen. Now, I want to go back actually to the S&P 500 really quick. Remember I said that, hey, the bulls after this day needs to show up for many, many, many more days. Now, looking back, this is day 4.5. Have the bulls come up to show up for many, 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 many days? Well, for 4.5 days, they've shown up and they've grabbed it so far. So despite, yes, I get, you know, there's intraday volatility up here, there's intraday volatility up here, but they've managed to stabilize and even crawl a little bit higher, right? So that is for what that is worth. I know a lot of people are looking at this. What if this is the first leg down, we then get a retracement, you know, a partial retracement of that move before another leg down, right? Everyone's monitoring that. That's not out of the question. I think that is one reason why there's so much fear, but we can't speculate as to what will happen. We have to take this day by day and say, hey, because of how we close today, this is what we can think about how we can do tomorrow, or how, you know, because if we start speculating too long into the future and that pattern doesn't play out, people are going to say, oh, well, now it's doing this. But then if it actually does play out, they're like, oh, didn't I say that? So it's a toss-up. It's a 50-50 chance. Might as well not speculate too long in the future. It's okay to speculate a little bit, but don't make that your definitive analysis, I think. All right, so let's, oh, wait, where were we? Commodities, right? So going to natural gas. Natural gas, I mean, this story is the same. Not doing anything. This is still looking bearish, below the 20, below the 50, getting rejected at these very critical areas, looking for the next down move around the 20 or the 50. Natural gas, again, does not show any sign of reversal, hence downtrending to 1.888, which is next support. GC gold futures today, a little bit of consolidation, down a little bit. Your resistance around 1545 to 1550. This chart pattern has not changed, probably won't change for a while. Given it's elevated, yes, but it can consolidate, it can have another push higher, and gold can do a lot of things. As you can see, during this time span, we can certainly do a lot of things, but in the end, still move horizontally. So, all right, let's go to a couple of your comments that were made yesterday. I'll start with Rico, or Giants, the Giants. Hey, Kevin, the Bulls were in control today. I bought AMD at 31.15. Great video. Thanks, Rico. AMD, one of the more bullish tickers. So let's take a look at AMD. So this is one that we've kind of constantly come out and take a look at. Today you can see we sold off at the end of the day quite aggressively. Let's take a look at the end of the day. All right, so we had initial push higher. We sold off at the end of the day. But let's look at the weekly time frame to see what's been happening. So yeah, this is, in fact, a pretty bullish sign, especially on the weekly time frame. This is showing us, hey, we really want to go above and push us above a major area. So it looks good overall. So far, this weekly trend shows like it wants to break a 20-year high, right? Coolio, and people say trading is boring. This is why I love trading. I didn't expect such a quick and strong rebound. This is why the market never gets old and boring. And it's good. I think if you find the markets interesting, you know, just want to avoid the adage of like over trading, right? But yeah, it can be exciting at times. Sometimes we have to weather a storm. If you're bullish, if you're bearish, so on and so forth. But you know, in the markets, you always have to pick a position. Otherwise, you just go cash, and you might ask yourself, well, why do I invest anyway? Sometimes it is good to go into cash, no doubt about it. Especially when we see signs of a bear market, then it is certainly good to go to cash. Okay. But usually you have to pick a position, whether you're bullish or bearish, and you have to kind of stick with it, you know, because that's your initial intuition. 70 options. I'm not convinced on this move up, so I think we're going back to the S&P 500. It broke above 293 key resistance, but the momentum has diminished quite a bit compared to yesterday's break of 288. You did some puts on SPY. Fingers crossed. Enjoying the videos. you should look at the S&P 500 1955 to 57 chart. Looks eerily similar to our current 18-month pattern. All right, so let's tackle your first comment, which was, so you did some SPY puts. Well, I think it might have worked out today. So today we saw a pretty sizable down move during the day today, right? We go back to the intraday chart. We see a sizable down move, and then we see an equal sizable move to the upside as well. And this is what happens. You can see a lot of trading certainly involved, but it really depends on what time span you're trading, right? For a lot of us in our group, there's some of us that some of the people in the group are trading in these 15-minute, 30-minute, or hourly time frames, right? But a lot of us are also looking at the longer term time frame. Again, risk increases as you trade in shorter time spans. So I think you already know that. But yeah, I think if you bought some puts, it was reasonable, certainly as we went down to, I don't know, if you were doing an intraday flip or something like that. Yeah, good. So let's take a look at 1955 to 1957. Actually, let's go to the SPX 1955. I want to see what you're talking about here. So I think we have to go to max. All right. Whoa. All right. Let's take a look. 19. Now, is it here? Okay, so these tick marks are kind of strange. 1955 to 57. So what happened here? Are you talking about this here? So you're basically saying that, okay, so during this time span, you can kind of see that we made a series of higher highs, right? And it's kind of hard to contrast a time period so far in the past. I kind of see some similarities here, but there's some. And okay, so in this trend, right, we have a series of higher highs, which looks similar to what we had this year. And then what happened was we started taking a dive back down, and we made a lower low. Okay, so is this the marker of your December low? So if this is what you're saying as the December low, 2018, this wouldn't really match up, right? Because this did not make a higher high. This year, we made a higher high just last month. So this pattern already doesn't match it. Remember, in a bear market, in the trend change, we need to see a definitive lower high, and we just made a higher high last month. So this chart pattern, unless you're saying we're in sort of this pattern, I would have agreed. I think we might be in some sort of like this pattern right now. But this pattern here, and then a major drop to the downside, less of a similarity. Let me just take you to the current day chart, right? So this is what I'm talking about. Can you see? We just recently made a higher high, right? If we expected something different for, the S&P 500, we wouldn't have exceeded these highs. We would have, in order for that similarity to occur, I would have said this curve up, curve, and then we just make a U-turn back down. That would be very concerning to me. But this is a different pattern. This is all I'm saying is there's more potential to the upside for this pattern than the potential for downside compared to the chart that you were showing me. All right. Thanks everyone for watching this video. Have a great weekend and take care. I will be with everyone next week as well.